Good afternoon, everybody. Today is Thursday, the 31st day of July, 2025. Now, I had to switch it from Wednesday to Thursday this week because yesterday, actually the day before yesterday, Tuesday, we had to drive to Richmond, Virginia, and spend the night in Richmond. And I came back yesterday. I didn't get back until 5 p.m. yesterday. But anyway, it's Thursday, so we're doing the regular Wednesday class on Thursday, Wednesday session on Thursday. I wanted to show you this little thing right here. This is just some trades on the NQ. The NQ trades that triggered this week so far, starting Monday, Tuesday, Wednesday. And this is what it was at last night. I don't know how that ended up being last night, but probably pretty good. When I created this. Now, what I've done in here, I put down in here trades run from the close of the signal bar to the close of the first gray arrow bar. So, this one here, this went all the way up to there. This one went all the way down here below there before it pulled all the way back up to there. Now, the thing about the gray arrow bar, this one right here is going to give you, usually the gray arrow bar is going to be like this one, right? It's not going to end at the top like that. It's going to end at the bottom. But the way it worked out here, it went a lot lower, so it would have been a lot more than 156 ticks, if you had your own target down there or something like that. But what I wanted to do is just show you in this example right here, kind of more of a mechanical system where you just enter when it gives you that right there, the down close right there is when you're going to get the black arrow signal, right? And then if you stay in it, usually the gray arrow is going to be a down close. It's usually going to be a down close. In this case, it was an up close, but usually it's going to be a down close. So you get it at the bottom of that bar, right? There's 200 ticks difference between the top and the bottom of that bar right there, but there was probably about another 400 ticks more in this trade than this 156 that you see right here. There's probably another 400 between here and down here at the bottom. We can go look at that individually right now if you want. We probably will. But the whole idea was to show you, from the entry point to the close of the first gray arrow bar. See, this kept going up and up and up all the way up to there, but it was a close to the first gray arrow bar. If you're doing it mechanically like that, and that's what you would have ended up with. Obviously, there was another 400 ticks right there going all the way up there, probably. And on this one, this was a stop out. That's why I might just show minus 225 because it didn't go down at all. And I don't know what actually happened on this. It is not automatic, Nalish. Hey, John. Good afternoon. And so the black arrow is the signal arrow. Yeah, the black arrow is the signal bar and arrow. Yeah, and that black arrow doesn't show up until the bar closes. Neither do the gray ones. They don't show up until the bar closes. But the idea behind the gray arrow is to let you know that the next bar is probably going to be the black one, so you can get ready for it. Now, there's a lot of time in between this and this, usually. Between when that happens and when that happens, because this is a 200 range right here we're talking about. So there's a lot of ticks in between there and there. Depending on what time it is. Like this, when I did this last night, I don't know what time it was when I did this last night. Or maybe this morning. It might have been the wee hours of the morning when I did it. I don't recall. But there's a lot of time in between when you get the actual signal and, but when you get the actual gray arrow here, you get the gray arrow saying get ready for the next bar. The next bar is probably going to be it. And usually, when you get the gray arrow, if the next bar closes down, that's usually what's going to be the signal, right? Every now and then you'll get a gray arrow and the next bar didn't close down, so you get another gray arrow. Like over here, you get a down arrow, a gray arrow, and the next bar didn't close down, so you get another gray arrow, and the next bar didn't close down, so you get another gray arrow, and the next bar didn't close down, so you get another gray arrow. Finally, it closed down, and you got your signal. That one ended up stopping. I really went about, 10 points or something like that in profit, but I just wanted to point that out to you. Can you do a video on how to set up the alert on phone, email? I'll do it right in here, Nalish. Okay, I'll do it right in here. Alright, so if you look at this is the NQ1, right? So let's just go look at the NQ1 and see what actually did happen with that. This is the NQ1 on the 200 range. So here's the NQ1 on 19, but let's put that on the 200. And it's about the same as the NQ1. And let's put the swing trade on it. Okay, so this was the one that I did earlier this morning when I took that picture, when I made that screenshot. This was the trade right here, I think. Yeah, that it started going into profit. This was the one that had stopped out, and this is the one that started going into profit. Right, let me just do the NQ1 so we're sure we're looking at the same thing. Okay, because that chart was from the NQ1. So these were the trades that triggered today. Alright, I believe this is the one last night. This is the one that stopped out. This is the one that went all the way down here, I think. Am I looking at the right thing? Yeah. This was the one from last night. This was the one that stopped out. This was the one right here when it started moving up. I think. I don't know. I'll have to go look at it in more detail. We can take the TV trades off of it because you don't really need that, and let's take the retracement off of it too because you don't need that. All right. So we're just looking at the same thing, the 200 range bar. And if I bring that picture back over here, where that picture was, it was a Telegram picture, I think. Yeah, this one, right here. Okay, so do I not have? Oh, I gotta update this. See, I don't have the warning bars on here. That's why it's not showing exactly the same. But if ever you get this little purple circle like that, that means you don't have the latest version. So click on that and do update to the latest version, and there it is. Okay. This actually looks a little bit different than it did on the other computer, but it's pretty close. So this right here was the bar from last night that I said 48 plus, because it had gone 12 points down at this point right here, but you can see it completed going all the way down, and then came back up, and then it kept going down. So what I would have registered on this, instead of 48 ticks, I would have said, okay, the close of this bar was right here, would just say 794, and where the gray arrow came out was right here, the close of that bar. So it would have been 794 down to 719, and doing the math on that, just do 794 minus 719 equals 75 points times 4 ticks a point. So it was 300 ticks is what this one ended up being right here. Okay, then this one right here, you would have been looking for the next gray arrow, right? The close of the bar when the next gray arrow shows up, or your stop. Now I had a question. That trade of 2024 would not have closed till later. This one right here, it closed right here on the gray bar. The close of the first gray bar is what I was looking at right there. So the close of that bar, the black bar, to the close of the first gray bar. That's the 224 right there. Alright, I didn't say all the way up here to this one. I didn't try to say the maximum amount that you could say. I said realistically, if you take it from right here to the close of the gray bar right there is 224 ticks. Okay, Lesh. The question was, so that 224, in fact, that trade of 224 would not have closed till later, right? It actually closed, it would have closed right here if you wanted it to, right? At the close of this gray arrow, right there. The close of this bar, this up close right here is when that gray arrow would have appeared, okay? So you could have gotten out right there if you wanted to. You could have put your target up here at the prior swing high if you wanted to. And you could have waited until the next black arrow if you wanted to. But I was just being conservative and saying if you just stay in from the entry point to the close where you get your first gray arrow, that's pretty conservative. Alright, I didn't want to, I don't want to fill you guys up with a bunch of crap and say, you could have gone from here all the way up to here and, that's like 1,000 ticks. And why didn't you? Everybody should have done that. That's just a bunch of crap. No, realistically, these are 200 range bars. If you get 200 ticks out of any trade, that's good. But these are 200 range bars, and if you wanted to be really mechanical about this, you would just enter when you get this right here, right, and you would exit when you get this right here. You'd enter when you get this, have your stop. Now this is a 200 range bar. This is, Jeffrey, I was just going to answer that question. Jeffrey said, what constitutes the stop placement? And I would say the bar size plus 10 to 20%. Alright? So for a 200 range bar, you'd have a 220 stop, maybe 230 stop. Alright, 10 to 15%. 10 to 15%. So 220 to 230 would be your stop on a 200 range bar. So you stop on this one, I'd put right here at 225. And that would be your stop. So you put it on and you leave your stop where it is, and you let it go until you get your gray arrow. Right? You put it on, you leave your stop where it is, and you let it go. Like this right here. You would have stopped out on this. You would have ended up stopping out. Now this did go you know, a lot of ticks into profit. This one too, you would have stopped out on both of those using that strategy. You could also move your stop to break even after you get 100% of a bar size. Like, you know, if you got a 200 range bar, after you get 200 ticks in profit, you move your stop to break even. You know, you can do something like that. Whatever you choose as far as moving your stop to break even. If you want to manage a trade that way, that's up to you. Or if you want to just put it at minus, you know, or half the risk, maybe when you get to 200, reduce it to half the risk. It's up to you. Now, one of the questions that I just got from Nilesh was this: how do you set the alerts for all this? I want to show you something else. I want to show you that, but I want to show you something else before I forget, right? I'm definitely not going to forget to show you how to set the alerts, but I want to show you something else. If you did what I just said, right? If you said, I'm going to take this trade, right? I'm going to take this trade, and once it gets to, say, 100%, I get 200 ticks in it. I want to move my stop to break even. All right, well, look at the time on this. It's 11:16. Right. Well, the open of this bar was 11:28, and the close of that bar was actually wasn't that bad. It was 38. It was only 15 minutes later, so it wasn't that bad. That bar took 15 minutes, but that's during the daytime. At night, like this bar right here, when you got the short on this, was 3:42, and then by the time it got all the way down here, or even all the way down here, you know, you're talking about several hours, like 5 hours. So you're not going to sit there and watch that the whole time. So. Jenny, didn't you ask for that already? I thought you did. I thought I already did it for you. Anyway, what I was going to tell you is this. What you can do is take a line like this, right? Then put it wherever you want. Like, let's say you want to move your stop to break even after you get 200 ticks in profit, right? So your entry point is right here at 794. So you want to go down to 594, right? Or 200 ticks, sorry, 200 ticks is going to be what, divided by 4, it's going to be 50 points. So it's going to be 794 minus 50 would be 744.75. Okay, just go here to coordinates and do 23,744.75. Okay, there it is. Now, you can add an alert on the horizontal line. So now you can do, when price crosses, you can do crossing down if you want. Crosses down on the horizontal line. You really only want to do it once per bar to let yourself know once per bar that it's happening. I mean, you can do it, you can do it once per minute. If it doesn't wake you up in the middle of the night, you know, go once per minute. Don't want to do only once, because if it does it only once, you know, it could do it and then go back, it could cross it and then come back up above it. So you could do once per bar close, or once per bar. Once per bar is usually good because it's going to let you know you're there, so you can start paying attention to it. Okay. But you choose something like that, right? Do crossing down, horizontal line once per bar, and that's going to let you know that you're at that point where you need to go do something. You need to take some kind of action. Move your stop to break even, lock in a little bit of profit, something like that. All right, you're at, you know, your 200 tick mark, and then you can manage it after that. You know, you don't know when the gray arrow is going to happen. You have no idea that it's going to happen right here, and this is where you're going to close out the trade. But what you can do is come back in here to the alerts again, right here. Go to the alerts again, but this time you're going to choose swing trade, and on the swing trade you're going to choose swing trade notice. I guess swing trade notice crossing out. No, it's going to be swing trade notice all alerts is what we want. Hang on. TV trades trigger. I think it's in the swing trade. I know I created this alert. TVT swing trade. Here it is, any alert function call. That's it. You can do TVT swing trade and any alert function call. So what this is going to do is when you get the gray right here, it's going to let you know. Alright, it's going to say you got an arrow. You need to go take some sort of action. Okay, if you want to exit on the gray arrow, that's fine. But you know, the next bar is likely, if you get an up close on the next bar, it's likely to be the trigger going in the opposite direction. Okay, so let me do this again. Alright, let me just add the swing trade thing on here. So we'll start from scratch, okay? if you go to here, and Jenny, send me an email. Jenny, I'm sure you already did, but send me an email again. And I thought I already did that for you as I gave you permission to this. But you go to swing trade like that, and then once you have it on, then inputs. Oh, here, I gotta do that. Maybe that's what I didn't do. Swing trade pre-alerts. Okay, swing trade pre-alerts. I think you gotta enable it like that. You go into the swing trades, and I'm gonna minimize that one. And then you come into the alerts, and you should have in here, this is the one that we did, right? So you can come in here and any alert function call, and you hit create. Alright. Now, Nilesh, thanks, Jenny. Now, Nilesh, you had asked me how to send it to the phone and stuff like that. I'm going to show you that in just a second. Alright. You want to set your notification in here to be whatever it is. Like this is the NQ1 200 range. Alright. And then over here, this right here, Nilesh will let you know if you have the app on your phone, it's going to buzz your phone when you get this alert. Alright, if you have Telegram, I don't think I have these alerts going out to Telegram. Right, I don't have the pre-alerts going out to Telegram. I just have these alerts going out to Telegram. On the 200 range, I have the actual ones going out. But you can set it up on yours if you want. The show toast notification, that's the thing that pops up over here on your screen. You can have it send you an email, so you can set your email to go off on your phone if you want. You can have it play a sound. You know, you can make all kinds of sounds now. They used to have just a few, but now they have all kinds of crazy sounds you can do. You know, like you can do all these different sounds. The webhook, if you want to send it to your own Telegram channel, you gotta, well, there's a couple of things you gotta go through to make that happen, but you gotta create your own webhook. You know, I have a whole bunch of webhooks that I created, IPS service, that actually sends it out to the Telegram channels. But those are the different ways that you can do it in Nilesh, okay? You set the alert, right? You create the alert, and then you go to notifications, and you just choose in here how you want it. Put the app on your phone, and you can have it notify you in the app. So my phone goes off, and there's a thing that pops up on my phone. Let me see. I'm sure I probably got some today. Let's see. Here's one right here. Okay. Let me screenshot this, and I will send it to my Telegram channel, and I'll show you what it looks like. Okay. This is what it looks like when it comes on the phone. Just a sec. Technology. Hang on. It's coming. It's coming. It's coming. It's almost there. It's there. Okay. So this is what it looks when it gets to my phone. Right? That was 3 minutes ago this came out on my phone. So it gives you all the information, the time, the signal, the bar close, all that stuff. Right? You can set that up so that it goes to your phone however you want. I don't know, was that TVT swing cell? This was at 1437, so that was, well, it was a little while ago now. And it was on the MNQ 100 range. Okay, so it's not anything in here. It was on the MNQ 100 range. But you can set, you know, once you do this, once you have your own, I mean, you don't really need to have the Telegram channels anymore. You can set this up for whatever time frames that you want. You know, if you want to be notified before everybody else, you can make it like a 195 range instead of a 200 range. And if it's going to happen, you know, within 5 ticks, or, you know, something like that, you'll be notified before everybody else gets notified. And you can have it send it to your phone. You can have it do it however you want. You know, you don't have to rely on the things that I create. You can create your own alerts on whatever time frame you want to use. And how do I define a swing trade? How long? That's up to you, Jenny. It depends, you know, from market to market. How much time do you want to have in between trades? You know, what I showed here earlier on the 200 range, the NQ, we had a couple of trades today, that one and that one. This one, I guess, came out in the middle of the night. So we had those 3 trades so far today. Yesterday, I think we only had 1, or maybe 2. 3 trades yesterday. 1 trade the day before that. Nothing over the weekend. Then 1 on the 24th, 2 on the 24th, 1, 2 on the 23rd. So, it gives you 2 or 3 trades a day on a 200 range. Are they all intraday? Well, they're whenever they go off. I didn't give you the option of choosing a time of day. There might be a way for you to do that. If you go into the alert thing, there might be a way for you to do that. Crossing value. No, I guess they probably don't give you that. I've created stuff that only give alerts during certain times of the day, but it's a whole bunch of other code that I gotta put in, and it's kind of cumbersome. But do you hold overnight? Well, some of them you would hold overnight. But usually, I don't know what... the question I think you're getting at, Jenny, is do you have to have overnight margins, right? I'm not sure what the brokers are doing right now as far as the overnight margins. Before, if you held anything between, 4:59 and 6 o'clock, you triggered overnight margins. If you held anything beyond 5 p.m., it would trigger overnight margins. Alright? And you wouldn't be using day margins anymore. I don't know if they're still doing that. I know when the markets were really volatile, they went to 100% margins all the time, but I don't know what they have right now for nighttime margins. Different brokers do different things, and I don't even know what... I use StoneX, and I don't even know what theirs is. But if you're using the micros, the margins, the overnight margins aren't much, so you don't really have to worry about the overnight margins. If you're doing the regular stuff, like gold and the ES, the overnight margins on those are a lot. So you do have to be cognizant of that. The time of day that these things trigger. That is something that you have to be you have to consider. Okay. So this is on the 200 range. You don't have to do it on 200 range. That one that triggered earlier was here on 100 range whenever it finishes loading up. There was one right here, and I think the one that I showed you was at 14:37:36. This one right here. This is one that triggered earlier. 14:37:36. Yeah, it was the close of this bar is what the timing was. I think the open of that bar. I'm pretty sure it was the close of this bar and the open of that bar. I don't know. This is what it said, but it was on the MNQ. So maybe I should look at the MNQ. We'll see. MNQ1. Let's look at the MNQ1. Here it is. Okay, so it was this one right here. Yeah, this was it right here. That's exactly right. Okay. It was the close of this bar, the open of that bar. Is what it was. Right. That's where it triggered this one right here. This one. Okay. So it was the close of the bar that opened, the close of the bar that opened at this time. It would bring you to this point right here. We'd look at, you'd be right here is where you'd be selling. Okay. Jeff, did I answer your question? Is this only accurate on large range bars? Will it work on the 47 or 59? Well, it'll work, but it's not really designed for it. This is really kind of picked to find the ends of a trend. Right? Where everything that I do on the smaller time frames, you're usually jumping in, with the trend. This is more for finding the end of a trend. Okay, it'll still work some of the time, but it's better with the larger time frames. Okay, what you're trying to find, the whole thing about swing trades is they don't happen very often, and they happen at the end of a trend or the beginning of a new trend. Okay, I'm sure if you put this with some other things together, you could find that it works out pretty well most of the time. When you get the black ones, not so much the gray ones. When you get the black ones, remember, the gray ones are just telling you that everything is just about ready to go. If you picture it like this, let's say you have this line. Let's say this line is 0. Okay, this is your 0 line. And you have like 15 things up here. All these 15 things. They're all going in different directions, and they're all going like this. And then all of a sudden, all of them cross the 0 line at the same time. That's what you're waiting for. Okay? And, you know, the stuff that we do in the morning, we would do the smaller time frames, it might be like 5 of these things, and we're waiting for 5 of those things to cross it. So that's why there's a lot more waiting in here. There's a lot more stuff that goes into it. Okay. And that's why it took me forever to create it. You know, when I'm creating things, like when I'm doing stuff, I'll just leave that on there. Well, I guess I can just do this. Remove 15 trucks. When I'm creating stuff, normally, you know, when I create stuff or I have ideas that I want to do for the stuff that I do on the smaller time frames in the morning, it's easy to create that stuff and then test it out pretty thoroughly. But when I'm testing out these things that only happen once a day, or, you know, 2 or 3 times a day, it's not. I don't even use the YBR in here, Greg, so I can't really explain what that is identifying. And it's part of the morning session, and it's proprietary anyway. But I'm not using that in here anyway. In here, you know, using the TV trades like this. Not using swing trades. You don't use the colors for the swing trades, right? You use the colors for the trigger trades. All the other trades that we use the colors for, these background colors. Alright, it's not like, Greg, you were asking about the YBR. The YBR is something from the morning session, and we don't use it in here. In here, if you have this TV trades color right here checked for the retracement stuff, when you have that checked for the retracement stuff, it's doing it based on these colors. Alright. Apparently I have something messed up here. Hang on. Let me do this. Something is not right here. Let me put that on. Like that. I minimize that and put this in and in here. And down here you do show retracement levels, and on this side hit the 50% retrace, like that. Okay, let's get rid of that one for right now. Now, if you have TV trades checked on this right here, on the input side, it's doing it based on these colors right here. When I say doing it, I am Jessica. When I say doing it, what I mean is it's positioning the midpoint and the overbought, the outer bands, the outer ranges, based on these colors right here. If you uncheck that, then it redoes it based upon the other thing, based upon the YBRs. I think that's how I did it. So if you check it, it uses TV trade stuff, and you have to have TV trades, you gotta have the password, you gotta have all that stuff. And if you uncheck it, then it does it without TV trades based upon, you know, the other stuff that we do in the morning. Alright, that's the way that works. So over here, for those of you guys who don't know about this, I don't know if anybody in here is in here for the first time and you haven't seen the midpoint stuff. Basically what this does for you, hang on, I'm trying to, yeah, let's get rid of it. Well, yeah, we'll get rid of that. We'll put it together piece by piece, okay? So, what I'm showing you is if you're in a downtrend, right? You're going to be looking for retracements that retrace to, they do 50% retracements, right? This is the whole reason behind creating this midpoint stuff. You're looking for 50% retracements, right? When price goes down, you look for it to retrace halfway back. And you look to enter at that point. If I stretch this out a little bit, you look to enter at that point. Right, when price is going up, you look for retracements that, I'm trying to find a spot, a decent spot. It's going to do it all for us, but when price is going up, you know, you're drawing away from the bottom or the midpoint, and you're looking for price to pull back 50%, right? That's what you're looking for. And, you know, and the reason I say that is because when price is going, come on, when price is going up and down like this, we want to enter down here, right? When it's going up, it goes up, we enter down here, we want to take advantage of it. Pulls back, we enter here, we want to take advantage of it. When it's going back down, we just want to do the opposite, right? So we enter there and there. That's what you want, right? Okay, so we'll remove that. And now, if you put the midpoint back on there, that's what it does for you. When it's in a downtrend, it's looking for the retracement to the 50%. That's what the black line is, 50% retracement level. It's calculating that for you. If you have the TV trades on, it uses the red background to determine that you're in a downtrend, and the blue background to determine that you're in an uptrend. Now, it resets all this. If you're in an uptrend, it resets it. When it comes out of the oversold, it goes to when it goes back in the oversold. That's where you have your midpoint drawn from. Okay, so if you were to do this manually, you would draw it from right here up to, well, to begin with, you would draw it up to here, right, the swing high. And then as that kept going up, the midpoint keeps moving up until right here when you find a little bit of a pullback, and then it goes up to here where you get your next pullback. Alright, but then it goes all the way down at that point. Sorry, I should have let it go up there. Then it pulls out of here and it has to reset, right? When it pulls back through it like that, it has to reset. So then your reset happens when it comes out of the oversold again, and then it starts doing it again until it flips around and the background changes color. And then once the background changes color, you're going from the top down to the bottom, right here. You see how the midpoint is right there on the black. When you go down to the bottom right here, it's right there. And then as it extends down to here, it's right there. Alright? And then it resets it when it comes up here. It has to do a reset on it. Alright? So it figures all that out for you, giving you the optimal place to trade. Warning lines? What warning lines, Chris? Oh, I just explained it all. Okay. Alright, I'm good. Okay, you're welcome. You have questions above, but another question you said in previous webinars, we can just use the stop if price goes above the high low of the signal bar. Yeah. Well, I quantified it for you, Wayne. I'm gonna go up and see. Wayne says he's been paper trading the NQ on 100 tick bar. It's great. And John said, can it make sense to use this 200 range swing as a higher time frame chart and then use still smaller for more pinpoint entries? You can, John. If you have this, and if you're using like the 200 range, for instance, if you have the 200 range NQ, and you get a signal, you get a swing trade signal from the 200 range NQ that says to go long. You have a minimum of 200 ticks you're expecting in that direction, right? So you could completely use that as a bias if you wanted to. And you expect, if you get one right here, you expect it's going to go up to the midpoint. Your price is trying to get back to the midpoint to bounce off the midpoint to go back down. Now all the same stuff is the same stuff. And can the gray bars be alerted? They are, Scott. Hang on. Okay, I just want to make sure I covered all the questions because it looked like I had missed a couple in there. Signal bar. Don't we get in on the open? You get in on the open of the bar after the signal, right? The black bar, the black arrow signals. That's when you get the alert that says, there's the signal, and you get in on the open, like this one right here. We're on the MNQ, right? Now go back to the 100 range. Back to the 100 range. Now the time that this puts in here is, where was this? This one right here, right? The open of this bar happened at 14:37:36. The open of this bar right here that I'm on right now happened at 14:37:36. All right, you would be getting in right here after the close of that bar, but it's giving you the time based on the open of the bar. It's not giving you the time based on the close. It's giving you the time based on the open. Okay, because this happens right here on the black one. All right, and so right there it's saying go short. right here at the open of this bar, or the close of that bar, goes short right there. And you can see that one went from here at 38.50, it dropped down to the low of this was, the low of that was 410. So from, if I put this guy on here, I did put that, this is something I want to show you guys too. The buy and sell profit ticks over here, from the open of the bar to the bottom would be the sell profit ticks, right, when 61 ticks down. And from the open of the bar to the top would be the buy profit ticks. You see these right here. So from the open to the top is 39 ticks, from the open to the bottom was 61 ticks. So it dropped 61 ticks on that bar, and then from the open to the bottom it did another 44 ticks. So it did 105 ticks down before it started pulling back up right here. So if you were going to bump your stop to break even after you get 100 ticks in it, you know, you would have had your 100 tick marker down here, have your alert set for that, and you'd have taken that trade right there. Okay. I want to make sure I answer all the questions. I haven't done a single trade yet. Right, you get in on the open of the next bar. That's right. It showed getting in on the close of the signal bar. Okay. Yeah. Well, it's the signal bar. The close of the signal bar is the price you want to look for. Okay. Usually it's going to pull back a little bit too. Usually it's going to pull back just a little bit. Not always, but usually this one didn't pull back at all. But this one pulled back a little. Well, that was an actual signal. This one pulled back a little. This one pulled back a lot. This one pulled back a little. This one pulled back a little. Usually that's going to happen. Alright, Joe, what about the red and blue arrows? The red and blue arrows come from the TV trades right here. Okay. By default, only the blue arrows are on when you put it on. Right? By default, you're only going to have the blue arrows like that. You have to turn on the red arrows if you want to. Now, you don't even need to have TV trades on when using the swing trade stuff. Okay? You don't need to even have it on. You don't need anything else on. Really. You don't need to have anything else on. You just need to have the swing trades on. If you're just going to do the swing trade stuff. When you don't already have a certain range just by adding another option. Yeah, John, you go in here. If you don't have a 200 range, you go in here and click on this little thing right here. And do add custom interval. Right? And then in here, choose range. And like I probably don't have a 123 range. Okay, so I would do 123 range. And I click add, and then it's going to show up in here. Like now I have 123 range. And if I want to show up here at the top, I just star it like that. And now it's right there, 123 range. Okay, that's how you do that. Alright, if you want to take it out of that list, just go down here and remove the star. That takes it out of the list. Okay. Have I published my stop target ticks? As far as this goes, what I just said, it's kind of a rule, Jenny. It's not a specific thing. I mean, if you go out here to Target View Trades, it's targetviewtrades.com, and you go to more, the risk management right here has everything up to 100 range that I typically use. Right, that I typically use. It's up to 100 range. When you're talking about swing trades, it's more than that. But I mean, you can do swing trades for whatever number you want. That's more than that. That's why I was saying I gave you a percentage as a guideline. I say do like 10 to 15%. It's 110 or 115% of the bar size. So if you have a 100 range bar, then 110 tick or 115 tick, something like that. Okay, that's what I mean about the stops. It's more of a percentage based when you get to larger time frames like that. Okay, because you can break it down to anything. You do like I just said, 123 range. Like if I did 123 range, if I go down here and I choose the 123 range, you know, you're going to have signals on the 123 range that we didn't have on the 100 range. You know, if I go to the 100 range, the signals are in different places. Like I got right here between 10 and we'll say 10 and 12. We have 1, 2, 3, 4, 5 there with that one, and if I go to the 123 range between 10 and 12, we have 2. Okay, so you can do whatever range you want to use. whatever you're comfortable with. You know, the risk is what really sets it for you, right? How much of a stop are you willing to take? You know, are you comfortable taking a 200 tick stop or a 220 tick stop? If you're not, then you need to go to a smaller time frame. I mean, even if you're on the micros at 220 ticks, that's $110. You know, if you don't want to risk that much, then go to a smaller time frame. It works well on all time frames, but when you start getting down below the 50s, it starts to lose its effectiveness. That was one of the questions that was asked earlier. Jeff, I think, asked that. You know, when you start getting down into lower time frames, then it loses its effectiveness. You should go with the stuff that's more with the trend and in the moment. Okay. And Jill said, what about the red and blue arrows? So what about the red and blue arrows? Alright, well, let's talk about the red and blue arrows. Right, let's get rid of the swing trade for a minute here. You don't have anything on the chart, right? So if you put the TV trades on, by default, put the TV trades on. Let's just do one by default. Let's just shut this one off. We'll do one by default. Okay, we'll just come in here to favorites and put a TV trades on there. Let's get rid of these drawing objects. Okay, by default, this is what you get. You get the blue arrows and just the blue arrows. Okay? And they trigger at a certain time. There's certain things that have to happen. Like, you're not going to get a blue arrow that doesn't have an up close before it. Alright? You're not going to get a blue arrow that does not have an up close before it. Like, you would think every time the background turns blue, you're going to get one, but you're not gonna. Not every time. Because if the bar before it does not give you an up close, then it just says, no. Most of the time, if the bar before it doesn't give an up close, it's not going to continue in the direction that the background changes to. Most of the time. Okay? So that's your default thing with the blue arrows. Now originally, when I created this originally, Jill, I created it for stocks, right? I created it for equities. Let's just do this. This is the company that I used to work at. Okay. I was talking about earlier, if I would have stayed working there. And it works great for stocks, right? But with this, you get like 1 or 2 a month. You know, well, on this time frame with this stock, you get like 1 or 2 a month. But it works great. And it was not made for scalping. It was made for just picking long-term equity trades, right? This is State Street stock. So if you bought State Street stock way back here, or if you bought options on State Street stock a month ago, you know, it did really well. And that's kind of what I was looking at, right? Now, it only has the longs on by default. Right? And so you might say, well, what happens, you know, what if you get this junk right here? What do you do with that? Well, by default, you just take the trade, and if you bought options, well, you'd be exiting your option when you start getting down below the bar that got you into the trade. However, if you want to filter some of this stuff, there's a thing in here called the bias, right? It is enable bias level right here, okay? Now that may or may not filter some of this. It didn't filter any of it. Basically what that's saying is only enter longs if you're above the bias level, right? And you determine what the bias level is. This number right here is a simple moving average. It says it right in here. The simple moving average, price is above it, only show buys. If price is below it, only show sells. Well, everything's above the 233 SMA right now, okay, because I have that on. But if you had this set to a smaller number, like say a 55, that might eliminate some of these. It might not. It's really, that is to eliminate when you have the shorts on with it, where it might go back and forth really fast like that. You know, if you set this back up on the 233, then it's probably going to get rid of one of those, yeah. So it gets rid of the shorts. But that's what the bias level is for. If you want to create a bias based on a simple moving average, you just have to enter it in there. But by default, this is what it looks like. Okay? Now, you don't have to have that on. And if you're doing swing trades, it doesn't make sense to have that on. Alright? You don't need TV trades at all. If you're doing the swing trades, you don't need TV trades on at all. You just need the swing trades. Okay? Now, Jill, I know you want to be so precise, but in doing so, you tend to put a lot of stuff on your charts. And this really takes stuff off your charts. If you're going to do the swing trades, do the swing trades. But just do the swing trades. Right? Now, that kind of goes against what John was saying earlier, but I don't really mean to go against it. If you're going to do the swing trades for a bias, not just for the only trade you're going to do, but if you're going to take long trades, when you have a long swing arrow, then that gives you a bias to only take long trades. And whatever other time frame you're working in, whatever market it is, it says just do long trades. And you see this, the swing trade stuff works on equities too. But if we go back here to the, to the ES, we'll say this was the NQ chart. I have to remember that. We'll go to the ES, and this is what it looks like on the ES, just randomly on the 123 range. Every one of these trades has worked out really well. Every one actually worked out well. This one didn't. This one would have been your stop out. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 trades. And one that was a complete stop out. That didn't go in your favor at all. This one, right here. Okay. That's all the swing trade stuff. I really wanted to cover that in detail with you guys because it's important that you understand that if you mix too many things up, you're gonna get all mixed up yourself. Really, that's what it comes down to. You can and probably should limit what you're putting on the charts. Like, you don't really need to have the mid-trend trades and the buy and sell trades on there. If you're going to do all of this stuff down here, you're going to be taking the trades like I'm looking to take right now. Now we're on the 123 range, but in the morning session on the NQ, not the ES, on the NQ I'm running 19 range right now. Okay. Now I haven't taken a single trade yet, that's why I want to jump in here and probably take a trade or two so we have something to show for this session. Alright, so what we're looking at right here, we're in the overbought and we're not touching the midpoint yet. Alright, so Chris B, what we're looking at here is we're looking for price when you have a red background, you're looking for price to hit the midpoint and to bounce down off of it. The midpoint is the black line right here. You want the black line to be flat like this. Alright, you don't want it to be sloped down like that. You want it to be flat like it is right here. So if this hits the midpoint, then it'll be like that. I'm going to be looking for a down close here on the Russell right now. So what I do is I bring the Russell over like this, and I find out where the top of the bar is, and I put this window always on top. Find out where the top of the bar is, and the top of the bar is 26.3, so I'm going to sell 25.3, 10 ticks below it, because it's a 9 range bar. Okay? That's what I'm going to do. And I'm going to do it right there on the ES too. Alright, the ES just gave the down close. The Russell didn't give it yet, but the ES just did the same thing, the same exact thing, and I took it on the ES too. So here's the ES trade. The ES has not gone 4 ticks into profit yet, I don't think. 75. Oh, and 3 ticks into profit, not 4. Alright, the NQs, well, I don't know what the NQ is doing yet. It's not really giving us a trade here. But you would be looking for a long trade on the NQ, but it didn't give you one. Alright, so now we're going to break even on this guy, and I think we should have gone to break even over here too. I'm going to lock in a little profit on the ES right now. That's $500, and so I'm out with 500 on that, and I'm out with a break even on the Russell. Okay, so let me write those trades down. Put them right in the spreadsheet directly. Okay, this is today. 7:31. So far on the Russell, we have 1 trade with nothing. So I'll put it 0 there, and on the ES, we have 4 ticks. Okay, that puts us at $500 so far. And number of trades so far, 2. Okay. I'll even draw it in like I normally do. That was a break even, and this was a +4. Right there. Alright, we did end up with a trade over here on the NQ. After hitting the midline, where is the profit target on the ES? Well, I do it the way I normally do. The profit target, originally the profit target would be down here. You'd look for the prior swing high or low, would be the initial profit target. Chris? Okay. See the background just flipped on this? You see how the bar changed color right here? This blue bar was on a red background. That tells you the next bar could switch the background color. Right, that's what that's telling you in there. So now all the backgrounds are red, so you're looking for red. Chris, if you hadn't seen that, then you probably haven't seen this. We got the color to flow down here to the bottom. I think Hal had asked me for that. Or Greg. One of you guys had asked me to make that match the top and bottom colors. So you can tell by just looking at the bottom that you're looking for shorts. You're like right in here right now. You know you want this to get into the overbought. Okay. So right now, what we're looking for is for this to get up into the overbought, for this to hit the midpoint. This midpoint is not flat, so it's going to take a couple of bars for a trade to happen over here. This is in the overbought, but it's not anywhere near the midpoint. Now, see, the midpoint is not flat either, so now you're going to need this to go all the way down into the oversold and come out of it before you take a trade on the NQ. Okay. This is not going to be a trade here. It's not going to be a trade. Alright, Jill, I want to make sure I answer all your questions, because I know I answered a lot of the questions that were asked, but I thought you had other questions that you wanted me to cover, and I want to make sure I cover as much as I can while we're in here. So not use on the MNQ119 range. I would use other stuff that's more accurate, more precise for that. Okay, the NQ is in kind of an odd place right here, where it gave on the down close, it gave an up movement, right? But it's right there at the midpoint, so that is actual trade. And I just shorted it, and I'll bring it over to show you. My stop just went to break even on that. I'm gonna lock in 4 ticks. That's $200, and I'm out with 200 more. Okay, that was an odd thing. That's happened a few times today. The marks are just weird today. They've been doing strange things. There's another 200, so let's just throw that right in that spreadsheet too. That's in this one right here. See, NQ, we got 4, alright. And it's $200 to the total, and one more trade to the total. Okay, and now this here did not make it into the oversold, so nothing else matters on this right now. Okay. So you don't have to even look at that right now. Moving the stop loss is needed, right, Chris? Yeah, trail the stop loss to break even. All the same stuff that I have in here in the risk management, you would normally do. Okay, for the smaller time frames. This is how we normally do it. Okay. You're in the overbought here, but you're not touching the midpoint, so you need an up close, and this is going to go sideways in the overbought when you get the up close over here. This is nowhere near the midpoint, so you're not going to have a trade there. This is getting there, but it's not quite there. And the gold is nowhere near a trade. Okay. Please show again how to get the black line on the chart. You got to go. You put in the password, right? You put in your password. That's not your password, but you put in the password that you were given. Click on match TV. I'm sorry. Click on show retracement levels, and then the black line is under style. It's right here. 50% retrace. Okay. If you don't put that on, it's just going to show you the highs and lows since the last time this came out of the overbought or oversold, depending whatever direction you're trading in. Okay, that's what it's going to give you. But the midpoint is what you really want to trade off of there. Okay, see the background color just changed on this. So now you need to get into the oversold and come up off the oversold. Okay, over here on the Russell, this was not a trade on the Russell because you weren't coming off the midpoint. This is not a trade because you're not coming out of the overbought. This on the ES needs an up close followed by a wick that's going to hit the midpoint and a down close probably. Okay, so you see what I'm talking about right here. If you listen to the words that I'm saying to you right now, I'm looking out a couple of bars. I'm saying, okay, like on the ES right now, we're not in the midpoint. We're not the midpoint, and we're not in the overbought. So if you get an up close on this bar, it's going to bring us in the overbought, but it's not going to touch the midpoint. And even if it did touch the midpoint, you still need a down close to come off the midpoint and come out of the overbought. Alright? Now, the background color keeps flipping over here on the NQ. I'm just going to stay away from the NQ for a minute. I introduced this to you guys last week, and it's not the first time, but I just wanted to show you something else in here. If you start getting really choppy like this, you can put it on the div area, make it a line, And then when the blue leads into the overbought or the oversold by itself in the direction of the background color, you can take the trade without waiting for it to come out. Okay, it's an aggressive trade. It's a really aggressive trade. But if I start getting behind, I'm not right now, but if I start getting behind, like in the morning session where I have a time limit, we just will have a trade here. We need an up close on this where will put us in the overbought. Okay, but we have to have the up close because we have to get into the overbought to have a trade. But when I have a time limit like I do in the morning, and I do right now too, we only have another hour left in this session. But I'm up pretty good, and I don't really need to be aggressive. The markets are moving around enough that I don't need to be aggressive. And you don't want to be aggressive when you have long leg lengths like this. When you have chop like this right here, that's when you're aggressive. Right here, down close on this. Now the background color might change to blue, so you have to wait for the close. Okay, it didn't change, so you can short right here. You can short right here on the NQ if you want to. Okay, because the background color didn't change. Now the background color did change, so you can't short right there. Well, that was what you could have done in there. I was waiting for the close there on that one because the bar was the wrong color. If the bar was the right color, you'd have definitely taken that trade. Okay? Or I would have definitely taken that trade if the bar was the right color. Now, this does not seem to be painting correctly, so let's redo it. Alright, so now the background color is blue, so what you want is a pullback down to the midpoint. You want that to get into the oversold. Now, I know this sounds like a lot, but if it's just one market that you're looking at, like this, you want this to get down into the oversold. You want, like that, it's in the oversold, now you've hit it. Now you want a close on or above the midpoint from this bar right here. That's going to pull it out of the oversold. It's going to be on or above the midpoint. Now, with the 19 range, it's 5 points from the bottom to the top. The midpoint is at 86.50. The bottom is at 81.25, so it's going to miss the midpoint by a tick. Right, the up close is going to miss the midpoint by a tick. It's going to be a little riskier if you take that trade. I like to be on or above the midpoint. It's going to be one tick below the midpoint. It might open right on the midpoint. The next bar might open right on the midpoint if you get an up close at all. But if you have just one market like this, it's not as much to look at. When I'm looking at all four markets and I'm rattling stuff off about all four markets, so this is definitely not going to be a trade. But when you're looking at all four markets and I'm rattling stuff off about four markets at once, it's a lot to listen to. It's a lot to see and say. This was a trade right here on the Russell that I just missed when I was watching that. It's not that bad if you're just watching one market, especially if it's a slow market, like if you watch the ES instead of the other ones. So right here, let's get rid of the leg lengths are pretty long on this, so let's get rid of the div area so you're not looking at that. Alright, so what we need, we're oversold. It takes 2 up closes to get from the oversold to the overbought. So the first one will get us here, the next one will get us higher. And then you're going to need something to close down below the midpoint. Okay, so you can look out a couple of bars because these are 7 range bars. So you know ahead of time how big every bar is going to be, right? You know it's going to be 7 ticks. So this is probably close right here. The next one will probably close about right here. See, close right there. Now the next one will probably close about right in here somewhere. But you're going to need a down close. It's going to give you an up close right now. You got to have an up close followed by a down close. There's the up close. That's where I thought it was going to close. Now the next one's going to be a down close. Alright, so right now you got a high on this bar of 82.25, so you'd be selling 80.25 like this. 80.25, just like that. Alright, 8 ticks below the top of the bar. I just lost my DOM, but the high is now at 82.25. Let's go find that DOM. Here it is. Alright, put the window on top. It just triggered us into the trade on the down close right there. Okay, so that's exactly what we wanted. It came out of the overbought as it closed down below the midpoint. That's exactly what we wanted. If it stops me out, and it did stop me out, minus 10 ticks on the ES. So let's punch that in. Where's the thing? Here it is. ES. It was minus 10, so we're at minus 6 on the ES in 4 trades. Okay. And let's draw that over here. Right, that was our stop out right there. That was a pretty good trade, easy and obvious trade. Everything looked good about that trade. Okay, so if you're looking at just one market, this isn't hard to do at all. Okay. We're in the overbought over here on the gold, but we're nowhere near the midpoint. We're turning blue on all of these. We need a down close on this to get into the oversold, a down close on this to get into the oversold, and then we need an up close on both of them to get out of the oversold. Okay. Alright, that's all on you, Wayne. It's all on you. It wasn't easy and obvious trade. That was a trade I'd take every time. Alright, so over here we need the up close now on this. Right there. Right in there was the up close. Okay, so the entry point should be right around here at 91.75. I know it gapped up here to 94, but 91.75 right around there. I'm going to throw my stop at break even on it. I did take it, and my stop's at break even. It just went 10 ticks in profit from my entry at 93.75. And it just took me out at break even. Okay. So let me draw that in. That was a break even trade. And so far I've only done conservative trades in here. Okay. So far they've all been conservative trades. Let me put that in the sheet. Here we go. In the sheet. That was another NQ trade. So I just add the number of trades over here. 5, because that was a break even. Okay. Alright. Why would your black line be different to mine? Unless if you have in here, if you do or don't have this checked, that would be one reason. If you're on a different time frame, that would be another reason. If you're using the 1 exclamation point and not the U symbol, that would be another reason. Okay. Oh, if you're only looking at the NQ19 range, the NQ19 range is a fast-moving chart. Right? It is just a fast-moving chart. There's no getting around that. There's no easy way for me to say, okay, well, you know, you just gotta look at it closer. You know, there's no way to slow that thing down. Alright? There just isn't. Alright, we had an ES trade here, because I'm in an ES trade right now. That is a long trade, and I'm pretty sure my stop should have gone to break even on. And it's going to give me a break even, it looks like, and it did give me a break even. Now, I entered that back here. Yeah, okay, that makes sense. I entered somewhere over here. Well, it's a break even. I'm going to add another to the trade count. 6. I had 25 trades on the NQ alone this morning. It's a lot of trading today. The markets are really active. Alright, so this has gone from the overbought to the oversold, so it just has to pull back up into the overbought now to give us another opportunity. This has gone from the overbought to the oversold. It is pulling back up into the overbought to give us another opportunity on a down close on the NQ. Now the NQ is a little bit choppy, right? It'd be 92.25 down to 87.25, I believe is the right number. 5 points away from the top of the bar is what you're looking for on the NQ right now. The ES is not in the oversold, so you don't have anything on this up close. You need a down close followed by an up close on the ES. Okay. And I just accidentally screwed something up on the NQ. Hang on. Alright. So the down close was right here. And I got out of it at break even, but I accidentally screwed it up and I actually double clicked and I had 20 of them on right there. But that ended up being the break even because it went 10 ticks into profit. Let me draw that. I didn't bring it over and show it to you, I know. I'm sorry about that. It happened so fast. Okay, we're in some pretty good chop here, so you could use, you could throw on the div line here if you wanted to, and consider trading aggressively. Now, unless that's going to be trading aggressively like this isn't aggressive enough, right? Alright, on the ES, we're in chop here too, so aggressive trade would have been to buy the open of that bar. Conservative trade would be to buy the open of this bar. The aggressive trade would have been to buy the open of that bar before it. Alright, we're in a red background over here on this, but we're not going to have a trade, it doesn't look like. No. Could that have been a trade right there? No, it didn't come out of the overbought. It did not come out of the overbought. Alright, so the indices look like they're starting to drop a little bit. Gold too, but gold needs to come up another up close on this bar, and the next bar could have a wick that hits midpoint, gives you a down close. Alright, so right now in the session we're negative right now, I think, because of that stop out we had on the ES a little while ago. Yeah, we're at minus 550. We're up 700. Something doesn't seem right about that. When this was plus 4. Yeah, that's right. Okay. Minus 6. Minus 550. That is right. Alright. It didn't print right over here on the NQ. Okay, now you have a blue bar on a red background. It still gave you the indication right here, right? Because you have a flat midpoint. It came out of the overbought. It's a blue bar. That's the thing that's giving me pause about the whole thing. Go check something on that. Hang on. Let me go check something. It's gonna be down here in the TV trades range trigger. Bar color. There. That's better. That's better. Alright, and here it is. Stop to break even. 86.50 down to 80.50. That's 24. And we're out with 24 on that. I knew something was off on those bars. Did you guys see what I did? Let me show you what I did. I knew the bar color was wrong there. Let me put this in too. Let's go back here. I don't normally do it every single trade like this, but on the NQ we are now 28 on that, and we're at 8 trades now. Okay. The thing I did is down here in the range trigger, this bar color was thrown off the bar colors on me. Right, you want the bar colors to actually be set by the TV trades. When you're trading like this, you want the bar colors to be set by the TV trades. They'll set based upon the background color. Alright, so down here in the trigger, you want to have the bar color shut off. Otherwise the trigger is going to determine the bar color, not the TV trades. Okay, and when you're trading like this, you're trading based upon the background color. Alright, so here, did we make it in? We didn't make it into the overbought. On the yes, we need an up close on this bar, and then the next bar could give a wick that hits a midpoint and give you a trade, but it doesn't look like it's going to. Okay. Alright. It's now 3:39, so we have about 20 minutes left. This is the blue leading into the overbought, so being aggressive, you could short it right here, but there's no reason to be aggressive because you have long leg lengths. The ES, this is the wick coming off it right there, 80.50 down to 78.50 on the ES would be a short right in there. No trade here on the NQ because the midpoint's not flat. The ES did give you the down close and it came out of the overbought, but I didn't notice this, I just noticed this right now. Okay, it's still okay. Because this one, where it came out of the overbought, did make it all the way into the oversold. Never made it back into the overbought, so you didn't have to have it in the oversold there. Let me explain what I mean by that. Every time price comes out of the overbought, before you trade in the short direction again, it's got to go all the way to the oversold. Then you can trade in the short direction again when it comes out of the overbought again. The idea is to stop you from something like this, right? Where it comes out of the oversold, it doesn't make it into the overbought, that means it didn't continue the trend. It comes back down to the oversold again, that means the trend is weak, alright? Usually it's not going to make it into the overbought again after that. Alright, like this right here, where it came out of the overbought, did not make it into the oversold. This, where it didn't actually come out of the overbought, but it didn't make it into the oversold. And it didn't make it into the oversold again. It shows that the trend is weak right there. Now I feel like I've been talking a lot. What I haven't done is say, if you haven't taken a free trial and you want to, go to tvtrades.com, click on any one of these orange things. It'll bring you down to the bottom. Down at the bottom, $25 a week, $9 a month, $97 a year. It's a 3-day free trial. Alright, just go there to sign up for the free 3-day trial if you haven't done that yet. We haven't hit the midpoint here on the gold, but we're just about to. We could, on this bar, hit the midpoint and give a down close. So you could get a trigger on this bar, or this bar could close up and the next one could close down, giving you a trade. Okay, that's the way the gold should probably work out. If it gives you a down close on this bar, there's going to be no trade, but hopefully you'll get the opportunity. Now, this bar is the wrong color on a red background. Normally, I would say you could just short right here at the open of that bar. I mean, you can't really just short right there at the open of that bar, because you went into the overbought at the same time that you closed on the midpoint. Alright, this did close up, so now you'd be looking for the down close on the gold. You could be aggressive and short it right there at the midpoint, or you could wait for the down close. On the down close, you gotta wait for the down close to happen, because the background color may change. With the blue on the red like that, the background color may change. Now, the aggressive trade that I took on that, I just threw the stop at break even, and it's probably gonna give me a break even on it. It's possible I could have an aggressive trade and a conservative trade at once. So I just got to break even on the aggressive trade, right? If we get a down close and the background color stays red, then that would be a conservative short. Okay, but let me go put that trade in here on the Russell. It's just one more number here. 9 total trades now. The gold over here, you have a high. That's what it looks like when you get one of the things pop up, what just happened right there, you see. But on the gold, 46.3 down to 45.3 is what you'd be selling on gold right now. Okay, and this did turn into a conservative trade. It didn't print the background color for you, but there it is. So that did turn into a conservative trade on the Russell. You could sell it right there. I just did. I'm gonna move my stop to break even. Hang on. Here, I just threw my stop at break even because I think it already should have been at break even, and I'm gonna lock in just one tick. Right, so I get a little something on the Russell today. And on the gold, we need the down close right here. Okay, Russell should get down to 19.8. Right here is where it should go down to. I'll lock in 3 ticks. That's $150 for me. Alright, and it took me out with 3 ticks in profit. Now, the gold did not give the down close, the gold gave an up close, so that's not going to be a trade anymore. But this ended up being a short right there. 3 ticks, let me put that in. This one. That was the Russell. So now we have 3 on the Russell, and we're 10 trades now. 10 trades. So we're at $800 right now. Not great, but it's something. Alright. Take a breather. Let me save this for a second. I want to go look. I want to go look out here and see what this is showing. Right, this is the MNQ on 100 range. So this trigger back here, that has now gone from the 94.25. So far, it's had a high up here to 416. So it's gone about 80 ticks, something like that, about 80 ticks in profit. This one, 1446, that triggered while we were in here too, right? 230, yeah, that's 240. So that triggered in here. So there were 2 trades that triggered, 2 swing trades that triggered while I've been doing this. And this first one went from 441 to the bottom right here to 375. So let's do the math on that. 441 minus 375. Those are points, not ticks. 264 ticks on this swing trade right here. And what did we just say on that one? On this swing trade? It's 94 up to 414, 20, 80 ticks, something like that. Plus 80. 344 ticks. That pays for your subscription. In this session, pretty easily. You know, with the other stuff that I'm doing in here, the other trades that I've been taking, these guys right here, I'm not counting the swing trades. With one contract, you'd be up $80 right now. Again, that pays for your subscription. With 10 contracts, I'm up 800. That's actual trades. These are swing trades that I didn't take while I was in here. But we've had 2 swing trades while we're in here that triggered so far. Okay, and back in here, we don't really have anything. This needs to finish painting. I missed an NQ trade. I missed this NQ trade. Is that the one you're talking about right there, Nilesh? Or is it this one? If I take off the div area right here, because we're not choppy anymore. I guess that was a trade right there, and this one wasn't a trade right here, but this was a trade right there. I did miss that nice trade right there. That would have been 45 ticks. Just need 1 or 2 of those. That's all we need. That last swing trade on the MNQ would have been a stop out. I don't know how far down it pulled. Hang on a sec, Wayne. We'll go look at that in a minute, okay? I don't want to miss another NQ trade if I can get one here. Okay, so we'll be looking for the down close. No, it's not going to happen on this bar. The ES might give us a trade, the Russell might give us a trade, the gold is not. The NQ is not going to, it's too far away. A down close on the NQ now will get you right about here and to pull you out of the overbought. So it's going to have to go all the way to the oversold and come all the way back up to give you a trade now on the NQ. Okay, see what I mean? There's the oversold, now it's going to get back up and then come back down. Oops, sorry about that. I didn't know I had my audio shut off. I was doing the math for you here, Wayne. Alright, let's go back to the other one right now. I kept doing that this morning, shutting off my mic and while I was still talking. Alright, so on the Russell, we need to get into the oversold to have a trade. On the ES, we never came out of the oversold and never gave a trade. We have a chance for a short trade on the ES, on the NQ. And that's pretty much it on the ES and the NQ. It's 3:51, we only have 9 minutes left. Wow. This hour and a half went by pretty quick. Alright, so over here, we're not in the overbought yet, but an up close on this would get us in the overbought. But the bar after that, okay, it didn't put us in the overbought, so it didn't reset anything yet. Wow. We're getting a big sell-off here right as we wind up the equity session. As we get closer to 4 o'clock. We're in the overbought now without hitting anything. It's going to take a couple of bars for it to happen. Everywhere. We need to hit the midpoint here. There it is. Now we need the down close. Okay. And there's the down close. My stop's going to break even. And crap. I'm taking some profit on this. Hang on. I screwed things up on it again. And alright. I'm sorry I didn't have time to bring it over and show it all to you. I accidentally hit it twice again and I ended up with extra profit on it. What the heck? I'm still trying to figure this darn thing out. Alright, well it just gave me a whole bunch of profit. Let me go figure out what I did. Hang on. I screwed that up. Why do I do that? It all happened so fast. And it was over here. I was doing it right now. If it triggers again, we need a down close right in here. Down close right in here would be another short. We got an up close. There's a down close. Okay, I'm in this one. Move my stop to break even on this one. Here, my stop's at break even. Whoa, was it break even? No, it just gave me a whole bunch there too. Hang on. Let me go see what I got on those last two trades. Because I screwed them up so bad. Alright. So the last one, we went from... Here, I'll show you the print. The last one on the ENQ, we sold 85.75 and we bought back at 80.50, so that's 5 1/4 points. That's 21 ticks is what I got out of that last one. And the one before I had multiples on. So, okay, this is a different one. On the one before, I'll show you. Now, this is the one that I just did. That was 21 ticks. And the one that was right before that was this one. That is oddly 21 ticks again, I think. Here it is again. I put the timestamp in it this time. It was 85.75 down to 80.50. So that was 21 ticks again. It's 5 1/4 points again. So between the two of those trades, I ended up with... Crap, I got another trade going on too. Anyway, between the two of those trades, I ended up with 42 ticks on the NQ. Okay, and there's another one setting up right here. Crap, I missed that one. Sorry. There's another one setting up right over here a second ago that I missed. So let me go here and put those other trades in and down here. 42, that makes it 60, 70 on that. And 12 on that. And there was a trade right here that I missed. There was no trade in here. The ES right here, that was a valid trade right there on the ES. Let me stretch it out so you can see it a little better. No, that wasn't a valid trade. It was above the midpoint. The Russell's about to give you a trade right here. Down close on the Russell right now would be a trade. That one, yeah, wait. That one that I was going to do the math on. That you said a minute ago. It was 136 ticks. Right, this ended up not being a trade here on the Russell. It's above the midpoint. If I blow it up a little better, you can see it's 1 tick above the midpoint. I like to be on or below the midpoint. That 1 tick makes a difference most of the time. Okay. We're in the oversold, but we need to hit the midpoint and get an upper close over here on the NQ for a long trade. Okay, on the yes, we're nowhere near the midpoint, and we're nowhere near oversold. No trade here, and no trade there. No trade here because it didn't make it all the way down to the oversold. It's 357. Alright. I kind of want to stop trading for a minute. Make sure I answered everybody's questions, right? Because we're running out of time now. And I just want to make sure I answered everybody's questions in the period that I had accidentally shut the volume off. Let me show you one more time. If you haven't taken a trial with us and you want to, you can go here to tvtrades.com, click on any one of the orange things that's going to bring you down to the bottom, and all the trial stuff is down there. Alright, click on any of that stuff. The risk management, this is on the targetviewtrades.com page. You can go here to targetviewtrades.com. You can take the trial from this page too if you want to, but if you go in here under more on this page, you'll see there's descriptions of everything that we have in here. Jill, targetviewtrades.com. Alright, there's descriptions of stuff we have in here. You don't need to learn everything. You need to learn one thing and be able to do that one thing really well. Alright. I had one of our guys who's been with us for a long time. He emailed me yesterday and he said the sniper is still his favorite. With all the stuff that we use, the sniper is still his favorite. You want to learn about the sniper? Learn about the sniper. You want to learn about the trigger? Learn about the trigger. This is the optimized trigger. The white one's down here. I got an email yesterday from someone who... It's Tango. Tango's letting me know something's not right. The email that I got yesterday was about the TV Trades range trigger, and in the email, she was looking at the Optimum trigger, and we have the Optimum trigger on. It puts the white on like that. Now, if your background color happens to be white, and you don't have the TV Trades on there, then you're not going to see it when it's white down there. Sorry, I just shut everything off. I shut the trigger off. I didn't mean to shut the trigger off. What I meant to do was shut off this match, like that. Then you're not going to see when the white goes down into the oversold. Okay? So, you gotta make sure your background color is the right color to be able to see the colors of these things, or you can go in here and change them. Okay? You can change the color of those things in here if you want to. They're right here, the optimized snipe. If you want to change that down to be a red, like that, so you have red and black, it's right here where you would change it. Okay? Boy, he was loud, wasn't he? He's a loud cat. He's our oldest cat. And he's a little bit deaf, I think. But I wanted to point that out, so you can do that too if you want to. You want to go in there and change the colors of this, you can go in there and change the colors of this. If you want to change the color of the snipe itself, if you want to do the Optimum trigger, you got to have that checked and go in here and change the colors up here. If you want to do the snipe itself, it's right here. Right now that one's set to all blue, but you can see this one is not set to all blue. And the differences in those colors represent this conservative bar right here. Okay? Alright. It's 4 o'clock, guys. This is what it looks like when you have the thing pop up. This is a Walmart. Says AA TVT buy. It's not one of the normal, not one of the new swing trade triggers, but this is going to go in the swing trade channel. Okay, 120 tick. Jill, go and watch that video. Okay, watch this video. It's 15 minutes long. Okay, rather than spend 15 minutes explaining it to you, just watch this video and you'll see. Basically, in a nutshell, when it's going to give you an indication. Wow, look how the market's just bounced around at the close. it's going to give you an indication when this goes into the overbought. If certain criteria are met, it's going to give you an indication telling you that it's gone into the overbought. And if it goes into the oversold, it's when it. If we put this on like that. If it's white when it goes into the overbought, you want to sell. If it's white when it goes into the oversold, you want to buy. Basically, that's what it's saying. If it's white going into the overbought, sell. White going into the oversold, buy. But you don't know it's going to be white until the bar closes. Okay. Go watch the video about that. This trigger video right here. Okay. Good evening, everyone. Oops. The question was, what's the difference between the regular trigger and the optimized trigger? That was a nutshell explanation for you right there. Now, these yellow arrows, they happen whenever price goes into the overbought, the oversold. They're part of the TV trades. You turn that on or off right here. Trigger alert. Notice there are actual alerts that you can trigger based on that. If you come here to the alert thing and you choose TV trades and you come in here. Hang on. Why is it not choosing the TV trades? Oh, it's this one. Okay, maybe. Yeah. Be trigger long potential and trigger short potential. Those are yellow arrows right there. You can set an alert based on those too. Okay. Okay. I have a short going over here on gold. I'm going to let it stop to break even. Here it is. And I'm going to lock in 4 ticks on that. That's 5 ticks. 6 ticks. And it's based on this right here, where it came out of the overbought. Right there. And this will be the last trade. Okay. And we're out with 6 ticks on gold. So we'll drop that in here. And the gold, we ended up with 6 on gold. Alright, and 13 trades. So, $3,500, 13 trades, 10 contracts, $350 with 1 contract. 35 with 10. We're up 70 ticks on the NQ, 3 ticks on the Russell, 6 ticks on gold, and we're minus 6 ticks on the ES. A lot of trades for this session, 13 trades for just this session. I guess, I had 45 trades this morning, I think. Right, didn't I? 47 trades this morning, and it was 2 hours this morning. This is an hour and a half, and I had 13, so I guess it's not a big deal. That's it, guys. I'm going to end the recording right here. If you haven't taken a free trial, go to this one, tvtrades.com. Click on trial anywhere in here. It's going to bring you down to the bottom. $25 a week, $90 a month, $9.97 a year. After the trial is done, it's a 3-day trial. Sign up for it now. Those of you guys who want to go and look in more detail anything, go to targetviewtrades.com. Right, there's videos about most of the things in here. Not everything, but most of the things in here there's videos about. The risk management, I have that right in here. How you should move your stops and stuff for the smaller time frames. Okay, it's all right in here. Okay? Alright. Let me shut off the recording right now. Alright, let me shut that off.